Is E for eMoneyWizard.com and MarketWizard.com. We are just into the open, about 10 to 12 minutes on Tuesday, the 4th of December. A reminder to traders to use risk capital you can afford to lose. Play this game long enough, you're going to get bit. You have to take the body blows. And that's one of the challenges that most traders have, I believe, is not enough capital to allow them to learn how to play this game properly. Anybody that is playing the range right now, we've said a good possibility that we have a 78 support and an 88 as a resistance pivot, and that battle is going on first. And so far, that's been true. What I'm trying to show right here with our swing chart is the range from the 18 to the 03. We've come a long ways. This is a double top for now, a retest failure. And obviously this 91 area, if we're looking at this model, that's a key ingredient in going higher. Got to get above that. That happens to be our pivot today. It's obviously the close from yesterday. So clearly that line is an important idea to get above and stay above, or get below and stay below. And at the bottom of that, we've got 64 and a quarter, which happens to be obviously that close from a couple of days ago, from last Friday. So right now, all we know is this is the primary box that we are trading to resolve. Rejected up here, rejected overnight down here, and somewhere in between is the truth. It's a very important chart for us right now. And that 12 and a half that we had talked about, big pivot. We'll take a look at one more chart for that idea. Anybody that's back into the 80 area to 78s, make sure you are paid, because that should be our first key support area. And over, we say we want to take a look at a number of different charts so that we can see the relative perspective. This is a perfect open battle between the dynamics of that half gap, 88 area as resistance, and that 78 pivot we talked about. There are hidden pivots in the market, and our system locates them. And go back and look in the notes. We said that much earlier today, that that's probably going to be a conflict zone that needs to be resolved before anything else happens. And this is called RPG or OPG. I like to use the terms RPG, rotational pivot game. Anybody that's got that 78 zone, paid for sure. Half gap, and in a rotational pivot game, what really is going on is they're establishing a range. And it kind of goes no place for a while. You go up, you go down, you go up, you go down, you go up. And it's establishing a range, and it's typically a non-directional move in a range. Sets the range that's important first. Magnet at 78 has been hit, paid for sure. And you can see how a chart like this helps if you start to read these moving averages. I said I thought this helped the shorts by starting out underneath the blue line. Then what happens is you bump into these lines that come down, and they don't have to press, but today they are. And once you see this, it tells you probably going to get that range we talked about. Very neutral type of open. Grab a couple of points, get out of the way is my best advice. Yesterday's mid-zone at 91 resistance for now. These are all potential resistance targets that the longs will try to get to by the end of the day. And this is a nice representation of that 3-point buffer down in here that risk and reward came in, and okay, let's drive it back. For now, until we get a lower low, this is unknown whether we get another lower high, lower low idea. 78's paid. That's a dime off that 87 top. Stops down. Two-way day. Range type trading, and a reminder this 73 is all important. Once it starts down this path, nobody knows whether it's going 10 points, 12 points, 112 points. Nobody knows. All you can do is manage. If you have a trailer and you want more, you got to manage it. A lot of traders just love to sit there and say, okay, until, something changes, I'm going to sit with it. But realistically, the market tends to range trade more than it does break out. And over time, I think you'll find you'll do just as well with hit and run. And let's just say you've got two contracts. One of them you get paid, and the other you can let run a bit. And you use the word units because let's say you have 20 contracts. So on 10 of them you get paid, and then spread out the rest. Still inside the overnight range, the bottom of the pipe. Anybody who is hitting the 78s, 77s, paid for sure. And anybody wants to buy the aggressive buy zone today, probably going to be this 75 to 73 as a support. Can't hold, then we're going lower. It's a nice opening swing for the shorts. Don't get caught thinking that this is an all-day sell. I don't believe it is. Bottom of the pipe. You should know these terms by now. Resistance, support back in here, and obviously any place inside that candle. This is a representation of a 2-day range using the close. So this is not a print range, but shows the importance of that 89 and why I believe that was magnetic. One of the reasons. And you can see where we are basis at. So 77, 76, 75. Theoretically, this is where you want to make sure you are paid in this 2-day range, theoretical range. And then next stop, obviously the lows back in here are the key support, 73s. And this is the basis for me saying to you earlier today, still got to get by these 89s, 88s as resistance. In the market about 20 minutes. Anybody took a short? Great trade. Got a magnet, we said 78, and one at 88. This neckline is broken, opens the door. Come back in and test the next box. And time and price, anybody that's short side underneath 77, 78, this is the good fortune part. Here's our resistance back here, basis this chart. This is the predictive model. So we're coming into the support zones theoretically. Stocks tend to follow this line in these two zones for the E-mini as deeper support zones, better value buys. Aggressive longs being stopped out, it's all we know. All important tests, 73.5, stops down. If you're in this with a trailer, stops down. This is retesting yesterday's low. Bingo. Started the day with the idea, 88 resistance, correct? If you get to 78s, make sure you paid, and below 78s, the good fortune part. Paid for sure if you are short at this test of yesterday's low. There's a stop run right now on the aggressive longs. And look at this chart right here and how good this was. As we opened up underneath this blue line, it gives it a little bit of an edge to the short side. All right, anybody that is short, make sure you pay. This should be a pretty good area to make sure you are paid. If we bust through this right now, I'd be very surprised. I'm looking at the NQ as well, tackling a pretty important area right now. Right? Should be our middle. So this is the box that's being traded by NQ. I like the NQ to help give us some clues. Anybody that has tried the first trade to get to half gap and said, I'm going to hang on to it because I got a huge winner, you must take your stop as it comes back. Even if you've only got one contract, don't let a winner turn into a loser. Don't try to average in, average in, average in. That's how you get killed. This is a shakeout. We may get shake and bake today. I'm not thinking we're going to get an all-day sell. We could certainly, but I'm not thinking that way. We started the idea with 68 support. So on average, I think the buy zone for the boys has been this 70 area. No matter what, make sure you're paid. This was a great open for the shorts. And you can see we're into our first box of support. 1 point is meaningless in the bigger scheme, of course, unless you take a stop out and then that hurts, but still, for the boys, 1 point's meaningless. This is their test of that low from yesterday. Time will tell. If you were able to get something out of this first swing, make sure you're paid. Coming in about a half an hour.